Alright, in this video, I'm looking to do the first of basically an educational series that I think should stand the test of time. Obviously, with YouTube, I post some of the trades that I take. This is a trade that I've taken today that I'm going to go over. It was a 1 hour break and retest, and previous 4 hour was strong bearish at a 4 hour break and retest area, and the last low of last week. And obviously, the previous day was strong bearish as well. So, to me, this is pretty textbook, aiming for the lows of the day, which was created at the start of Asia session, and then anything more was a bonus. I took most off at the lows of the day. After this strong 1 hour candle, I was very happy with that kind of move, and I thought that we could at least maybe go sideways or come back into this break and retest area, which price did eventually, but we got another kind of push in the next hour or so. So, all in all, I was very happy with that trade. Just stop loss above the highs of the previous 1 hour, and basically it pulled back at the start of the new 1 hour and then dropped. This was a management point as well, because this was the origin of the pullback in the lower time frames, and then low of the day. So the subject that I want to cover is, these videos are basically my thoughts on day trading, the kind of, I'm going to be calling it the pillars of trading. And I'm not someone that's going to say, right, I am the be all and end all and my way or no way. I'm just trying to put out stuff that is going to help at least one person that watches this, that they're at least going to take some notes, and they're then going to watch the rest of the educational content that's going to be this one, obviously stop loss. Then there's going to be ones trade management, 1 hour, 4 hour trading analysis, session analysis, entries, key patterns to trade, structure, and then if there's any more topics that I can think of, then I'm going to create it. I'm going to try and keep the videos to 10 to 12 maximum so that it's easy to watch and just going to be on YouTube for people to kind of get a glimpse into the course and what I kind of do on a one-to-one basis with people. And yeah, just going to try and give as much value as possible in the way that I feel it's suitable. So a big sticking point for a lot of people is the stop loss placement, and it's something that I've tried to make as mechanical as possible through my trading kind of time. So whenever I first started trading, the first couple of courses I bought, it was higher time frame swing trading, usually looking at the daily. You entered on maybe a 50% pullback of the previous day's candle in the right areas, and then you put your stop loss below the lows of that candle. Now, if you do that, that's totally fine. But for me, I was like, there's got to be a way that I can give the market some security, some buffer, but also tighten up my risk to reward, tighten up the way that I'm trading. Now, then there's the extreme side of that, where there's people that are happy to take break-evens, happy to take more losses, but they're saying that their stop loss is less than 5 pips regularly. And they're taking trades, basically very deep pullbacks. That's how I see it. They're very deep pullbacks on time frames, and then seeing how price is reacting on the lower time frames, 1 minute, 5 minute. Not everyone's able to look at those either. And then getting in the trade and expecting the trade to go cleanly in their direction. And we all know that 1 minute, 5 minute price can make a push and then pull back, make a push. It can make multiple pushes within 1 hour candle, never mind within a day that it retests that area. So for me, I've tried a lot of stop loss stuff in my time, and what I feel most comfortable with, what I feel I get the best results with, what I have trust in the most is having stop loss that's at least protected by something on the 1 hour. Now I'm gonna go over what I mean by that, like as I go through the video. But I would highly suggest that you get a notepad, a pen and paper, or create a Google Drive folder or something that you can start collecting notes that you can use for your own trading, and start testing a subject week to week that you can try and get better at, refine, and then be totally comfortable with it in order to focus on another area that might not be as mechanical. So I trade, obviously there's the course and got videos on how I trade, and I'm going to be doing a video on like specific patterns that I trade. But I essentially trade what I see as continuations and reversals. Now, the continuations they're to do with certain time frames. So obviously, more often than not, I'm trading a deep pullback, if not a reversal, on the 1 minute or the 5 minute, if you were to look at it on that time frame. It's very rare that I'm going to be taking a 1 minute break and retest. It's just not the way that I trade. They can work. I'm not saying that they don't, but I'm just saying that a 1 minute break and retest, you still have to be selective when you take that. And I would rather not focus on such small time frames unless it was at very key times of the market, very key times of the day, like session opens, new 4 hour candles, etc., key areas. But the point is that key areas to me, and that'll be part of the other videos, is they're key areas no matter what time frame you look at. And the key areas for a day trader, in my eyes, are 1 hour and 4 hour. Because if something's been holding for a few hours in the 1 hour time frame, then if that breaks or if price bounces from there, then the likelihood is that that is going to be a key area for the day, or for at least the session, for at least the like London session or New York session, whatever it is. It's going to play significance for at least the next couple of hours. And if you are day trading, then that's usually enough to get in and out of the trade that you're looking for. So for me, I have continuations where I'm not getting in a 4 hour structure usually, and the momentum's already pushing. Now, for me, this is an example of a continuation trade, because the reversal for this particular move and the day is up in this area. Now, I wasn't up at the 627 candle. Obviously, it's taken out the highs, made a new high, the day turned, and then we've had that kind of push. So the reversal, in my eyes, is up in this area. Now, then we get the immediate continuation, which did offer trade opportunities. 728 candle, strong bearish, price comes up to the highs of that, and then obviously a clear buy high area, stop loss above the highs, and then you have a nice drop for a couple of hours. Now, for continuations, in the first 30 minutes, so let's just type the first 30 minutes. If you're entering in the first 30 minutes, I want protection from the previous 1 hour candle. I don't care about the lower time frame structure as such, because you can get fake outs and break back ends, you can get slight pushes in the opposite direction, and it's I don't want to micromanage my trades as much as possible. I want to just give them a bit of room, slightly alter the risk to reward, and just be more relaxed with trading, rather than, oh, it's going in my direction 5 pips, oh, it's coming back, and I don't want to work like that. I've done that before years ago, and it's just not the way for me. So in continuations, first 30 minutes of the current 1 hour that you're entering in on, you want protection from the previous 1 hour candle. So if you're going short, you want protection of the previous 1 hour candle's highs. And if you're going long, you want protection of the previous 1 hour candle's lows. It's as simple as that. That's that. Now, the second 30 minutes of entering, I want protection from the current 1 hour candle, at least. Now, if there's, say, you're entering at 22, the whole point of this, right? The whole point of this is, so this is for continuations. The whole point of this is that you're trying to give your trade as much protection as possible. I mean, I don't want to keep rambling on, but this is, to me, this and trade management are two of the most essential parts of trading, if not the most essential parts of trading, in my eyes. Obviously, the psychology and stuff like that is something as well, but these can be made in such a mechanical way that you can then focus your energy on whether the trade is possible, like entries, etc. To me, stop loss should be non-negotiable. It should be black and white. It should be, right, if I can't get this, then I can't take the trade if it doesn't make sense. So if you're entering at 22 the hour, so you've got 20 minutes of a 1 hour candle left, the likelihood is, if you're entering at the right time, the right moment, and you understand the 1 hour and the 4 hour trend, etc., the likelihood is, with 20 minutes to go, that if you're entering short, the highs of the 1 hour will be the same as you've entered 20 minutes later. As long as price, as I say, obviously there is other factors. You can't just blindly go, right, every 1 hour, 20 minutes to go, this is going to be the high or the low, because that's not the case. It's whenever everything, like other things, are lining up that I go over in the educational series, that I go over in content, that I go over trades, that I go on the course, that I speak about constantly. You can't just look at something on its own and be like, right, this is the be all and end all. So you want protection from the current 1 hour candle at least, because the logical thinking, the thesis, the part of it that I've back tested, that students of mine have back tested, that people that I work with have back tested, is more often than not, that is going to be the low or the high of the 1 hour whenever it closes after you've entered. If it's in the first 30 minutes, obviously the probability gets less the more time that price has left in that 1 hour. And I like to just think of trading as a very logical thing. It's a human emotions at the end of the day. That is what trading is all about. It's human emotions. Yes, there is algorithms. Yes, there is robots that trade, but the general way of the markets is still run by humans. And for me, will be run by humans for a long time yet. So if I can't get this protection for a continuation trade, that makes sense for me technically, I'm just not entering the trade. I'm just going to have to do something else. I'm just going to have to wait an hour. I'm just going to have to wait for something else to turn up. So that's continuations. You want to just write this down. You just want to look at it yourself. Look at maybe your last 2 weeks of trading, and look at maybe your losers. Obviously, you should journal. You should be keeping a note of your trades. You should have screenshots. You should be able to understand going back. You should be able to look and be like, right, okay, well, this is a trade I've taken. This was my stop loss. This was my reasons. All this stuff. That's just basic 101 trading. If you want to treat it professionally, you have to do that. So there's that for continuations. Now, the whole thesis of the stop loss protection is that my continuations, I'm expecting to be in the trade for an hour or two. I've got pretty clear targets that obviously will be talked about in trade management. But as I say, for this example, it was the origin of the pullback in the lower timeframes, which was down in this area. And then the next main management point was the current low of the day. And if basically it made a new low of the day, then that was a bonus. It was also the low of yesterday. So I've got that already in my head. I've got that. If I can't trade with that, I'm going to look at another pair. I'm going to look at another trade. I'm going to wait. And that just takes so much out of my mind in terms of, if this, what about this, what about that? It groups, like, because to me, a lot on the 1 minute, especially the 1 minute, but the 1 minute and the 5 minute, there's areas on the 1 minute and 5 minute that matter if you're trading for, say, holding a trade for, say, 5 to 15 minutes or whatever. But usually those areas are broken and retested and all that. But there's usually a slightly bigger area of, maybe, depending on the pair, that is basically an area of interest. Like, it's not just an exact line, as you know, with trading. It's not an exact line. It's not an exact price. So with this thought process, that all came about because I basically had a thesis that I was like, well, how do I take stop loss out of my thinking? How do I just make it as easy as possible for me and simple as possible for me to just be like, right, okay, I'm going to take this trade, and I don't want to have doubts about my stop loss placement. I want to make it as solid as possible that also will give me a risk reward that makes trading worthwhile. Now, obviously, you're not always going to get amazing risk reward. That's just not the way that the market works, but it can be an amazing tool to use in your trading on a day-to-day basis. Obviously, check it for yourself. So that's continuations. So let me just leave that there. Now, reversals. Reversals, you want protection of the previous 4-hour high or low, ideally. You want protection of the current day's high or low, ideally, again. And the very least you want is the minimum is the high or low of the current 4-hour candle. Obviously, that encompasses the 1 hour anyway, so that's why I'm just focusing on that. So another thing that I would suggest and that I would write down right now is whenever you're taking a trade on the 1 minute, 5 minute, 2 minute, 3 minute, 4 minute, I don't care. Anything below the 1 hour, before you place that trade, go on to the 1 hour and see what your stop loss is protected by. Write it down, make it a part of your journal. And the 4 hour as well. I would even do it for continuations, the 4 hour. Even if you can't get any protection, like if I just go on the 4 hour now, you can see that at the time I was protected by the highs of the current 4 hour that I entered in on. Now, this wasn't a reversal, so I didn't need the previous 4 hour. That's not something that I felt I required. But you can see that I had protection of the current 4 hour, which is ideal. You can see, look at this. Next 4 hour, 2 till 6, prices taken out the highs of that and then dropped ever since. Now, again, you can't just look at that in isolation and be like, right, anytime that price takes out the highs or takes out the lows of a 4 hour candle, I'm going to trade it in the opposite direction. No, you don't want to do that, because if that was the case, then price would just range for the rest of eternity. So price has to break. That's why trends are created. That's why this kind of stuff is created, because that isn't possible to happen. So you have to have multiple confluences for your trade and use that to then formulate a plan and execute. So I'm aware of the time, and I want to just kind of go over it, but I don't necessarily want to go over examples as such. It's more the theory behind it that you can then message me. You can see how you're going. You can comment below about what you found with this particular thought process. Okay, if you're wanting really minuscule pips, this stop loss size in terms of pips, this probably isn't the formula for you. And I honestly wish you the best in your trading. I'm not here to try and say, right, you have to follow me or nothing, because there is multiple ways to work in this market, and I'm not someone that's going to turn around and say there isn't. But if you are someone that is day trading or looking for your 1 to 3 good trades a day, possibly, you like to be patient, you like to have your areas, you follow the kind of general plan that I show in my videos, or you've seen how I trade and analyze, and you want to do similar, you want to trade similar, this is me just putting it out onto YouTube how I basically do my stop losses in terms of protection. And it's not hard to get into your head. The thing is, you've just got to commit to it. You've just got to say, right, if I can't get this protection, then I'm not going to take the trade. I'm not, like, if you're entering a trade that is lasting an hour or more, I can't highly suggest this kind of thinking enough. If it's less and it's more kind of in the scalping territory or within an hour, most of your trades, well, to be frank, you're not always going to need this kind of protection. You could do the same kind of thought process, but with like the 50 minutes and think of it in that sense, because it works in that way as well, as long as you're timing it correctly. But it's a very good way to utilize the candles as ranges. So obviously, automatically, whenever a candle closes, you have the high and the low. Obviously, the open and the close as well. But the high and the low, that is telling you that the highest point of that time frame and the lowest point. So obviously, the highest point is there for a reason. The highest point is there because sellers came in that didn't allow price to go any higher, and the lowest point is there for a reason, because buyers came in for that time frame period and didn't let price go any lower. So you've automatically got a range to work with. Then it's just about you determining your bias within that range, which you would already have from your trend, from your momentum, from previous closed candles. You'd already have that. Then it's like, well, I want to enter here. I want my stop loss protected by this. If this doesn't happen, I'm going to wait 1 hour. If I don't get the trade, then so be it. It just so happens to be that way, and there's always another day, rather than going and chasing price. So yeah, that's stop loss. That's stop loss thoughts and rules that I use day in, day out, week in, week out of my trading, that has taken my stop loss from being a real sticking point with my trading and a real kind of area of like grey area, not really knowing, right? There's a lot of people that might be like, well, for this type of trade, I'll do this, and you've just got loads of different ones, or, oh, in order to get a better risk reward, I'm going to put it here, but then sometimes that will work, sometimes that won't, and all this kind of side of things. I just like to simplify my trading. That's why it's Simple FX. Is this the simplicity to me is key. Now it doesn't mean that trading's easy, but if you can simplify your stop loss, your trade management, and your entries as well, your analysis, you're just making things easier for yourself, that you're not having to go and write loads of different words in your charts, or write put loads of different lines, or all this kind of thing. You're just focusing on the here and now in price, and you're just working with what you feel could be the main push of the day in that pair. That is usually going to take place between London Open and kind of 3-4 o'clock UK time. That's usually the main move of the day, occurs within that 80% of the time in my eyes. Obviously, Asia sessions, sometimes you'll get strong trends. Depending on the pairs, it'll be more often than not. If they are Asian located currencies, then obviously it's going to be slightly more. But that to me is the general thought process. So I just want to wrap it up there and kind of just make you think about your own stop loss placement. Can you be a bit kinder to the market and just give price that bit more room, or less room but still be as confident, and then just see how it works for yourself? Like, let me know what your thoughts are, how you've progressed with it, what you're thinking. I'm always down to chat with people that are serious about trading, that want to focus on the process and make the process work for them on a week in, week out basis. So yeah, if you've got any comments, leave them below, get in touch with me on Telegram, whatever, and look out for the other pillars of trading educational series videos. And I think they will be useful. If you found this one useful, then give it a like, subscribe, and yeah, I think you'll be able to find the other ones as useful and take it into your trading and work at it week to week. Don't expect miracles the next day, but just focus on it. Try not to get distracted by other theories and thought processes. Just give it some time, work at it, see the results, and just tweak it as you go.